Hi there. In this video, we're going to look into governance and research L1s, including Cardano, Polkadot, and Algorand. If you're new to my sessions, I'll cover their Wyckoff stage, potential price change, as well as key price levels. These are education content only, not financial advice. And to help you avoid FOMO and panic, the Asset Tech dashboards are now available on Substack. Go check it out at L1s. They're available both as app and web version. Let's go back to Cardano. This is the weekly chart, and Cardano has entered the early accumulation cycle. It has gone through the panic over stage and currently going through the paper hands, diamond hands test. That's the typical behavior during the accumulation cycle. So you can see these sorts of up and down until the point that the whales find no more diamond hands. The other way around. No more paper hands, only diamond hands remained. Then that means that there's nobody going to sell anymore. However they shake it, they'll let the price to go up, and then they will test it one or two more times before they let the price launch to the next distribution. And a very key factor that I consider is that you can see the FOMO usually lasts around a month or two. Of course, for this cycle, for Bitcoin, that's a little bit different. But for a lot of altcoins, you can see something similar. It takes about 1 to 2 months, and then it eventually, the steam is gone and it dies down. That's totally different when we compare to the 2021 scenario. Okay, so it really depends on what's lining up, because if there are sufficient fuel, like money printing plus a bunch of good news that lines up for the next 6, 8, 12 months, that's how the FOMO gets fueled and sustained. Okay, if not, then like this case, it died down after 5 weeks. Okay, so in short, you can see very short-lived FOMO in a lot of altcoins with this cycle. And then if you go back to history, whether you consider that the effect of the COVID money printing or there's lack of, how should I put it? Lack of prices back then in 2021-22, because we were basically after a gigantic crisis in 2020. And then that's when the people think, okay, things should be fine thereafter. And that's where it fueled the FOMO for not an entire year, but 6 months roughly. Okay, 30 weeks over there. So back to this point, what I was trying to say by explaining that is, if we get to the next distribution cycle, pay attention to what's lining up in the next 1 to 6 months, whether there are sufficient good news along the way to sustain that FOMO. If not, be cautious or be mindful. Something short-lived, as short as a month can happen. Okay, so backdrop, more shaking. We hope to see the sign of strength, a very typical stage in a lot of accumulation cycle. Okay, you can see higher than average volume and sustained price growth, higher than average volume, sustained price growth to re-challenge where the automatic rally landed. In this case, for Cardano, it was the green key level of 0.406. So this time, it's similar, the same green key level, that little bulge over there. If the price comes up with higher than average volume compared to previous 1 to 2 months, then I will consider the sign of strength has happened. But sometimes it gets more than one sign of strength. So that's the tricky part during the accumulation cycle, when the whales are waving or creating waves to do what they want. Okay, daily chart here after Cardano exited the downtrend since mid-February. Okay, right over here where this tag is pointing to. When I shared, okay, the downtrend channel ceiling is crossing the red line over there. So there's a window for the breakout to happen. And indeed, it happened over there. And since then, it has been range bound between this top yellow dash line at 30 cents and this dash line at the bottom, 0.245. All right, so it's been over a month that this range bound has been going on. But looking at the volume, there's no big commitment from either side, the bulls or the bears. Okay, so the base case is still between these two lines until either one of those critical factors happening comes in, and there's a chance for this to break outside of this sideways trading area. Okay, depending on what the news are, if those are bad news for liquidity, then it's going to drop to this side. Otherwise, it's going to challenge the orange key level of 0.327. So I believe you have heard about the US private credit crisis. Everybody knows about the Middle East war. The stock market is starting to react. Gold and silver started to drop, meaning somebody may be cashing out or moving their money to chase the price surge in oil. So those are the things that are affecting the money flowing around. So once those games are over and then the new Fed chair comes in, whatever policy came in that helps or doesn't help liquidity, that's going to drive the next phase of movement direction. Next is Polkadot. Polkadot, if you look at the trend over here, it has gone through a very, very deep test, okay, during this accumulation. And it has gone to a point that it almost rechallenged this red key level of 0.97. That's a level, triggered by the tariff announcement day in October last year from the US, okay? When Donald Trump announced that that the tariff on that date, the price, whether it's spot or cascading effects of stop loss or a fat finger, it doesn't matter. The price did test this level, and this round of checkout also came to very close to that level. But what happened 4 weeks ago is very indicative that volume was immense, and that may signal the orange key level of 1.45, at least for the short term, is probably a pretty solid level, okay, as a support as of this moment. You see 3 consecutive weeks, while the price still receives pressure, these long weeks from the top, the price closes around the same level. Okay, so this range around 1.45, if once again another drop happens and stay around 1.3, okay, that's what those 4 weeks were. If it happens again and we see another volume came in, pushing the price back up, that may be a sign there are some whales sitting over there. They're sweeping up whoever that's selling. That's how I look at it. Okay, you can treat it as just a story. And then, obviously, we want to see the sign of strength to come back. Okay, I'm not going to repeat because I've already explained what it is during Cardano. And here, same thing, range bound between 2 yellow dash lines from the 123 all the way to 167. It has been like that since 31st of January. Okay, this range. Of course, there's like somewhat like a center line over here, that 1.45 orange key level I just mentioned. You see it's cutting it by half, and it looks like the price is coming back to the lower half. So I'm extending this line. The base case, range bound like what it did. If positive news comes in, obviously we want to measure, okay, whether there is an uptrend developing. But as of now, you can see what's happening. There's no higher lows. There was supposed to be one. If we line up this February 25th along with March 16th, but you see what the price drop just did, right? It basically fell through that support line. You can say just today, okay? Yesterday, it was still above that support. So I wouldn't consider that for now. So that's why I said it's more likely sideways. But if it is going through a more mild uptrend and it hasn't dropped through that yet, if I line up the 6th of February through the 24th, and then we've got a little bit of upside over here, this candle I was looking at. You can be more conservative and not include the weight, but I would guess based on what happened. Okay, if it's something like October 10th, this crazy thing over here, whether it's bots or somebody made the wrong order, those kind of scenarios, those outliers, I wouldn't put that into the channel because it distorts the view heavily. Okay, but these small ones, I will include until the point that there are sufficient reference points, later that builds up that invalidates that particular wick. Okay, so as of this moment, the short-term support line we talk about, it has been broken, but there's longer term, if we measure back to end of January, it's still above that channel support. So I'll keep this channel box over here in case it really is building the case to challenge the 2.06 yellow key level. I can extend it all the way to here because like what we did in the previous sessions, we want to know what kind of date is this pointing to, because if the price really comes up to challenge the 2.06, okay, and gets rejected, but still maintain this momentum along the upward channel, it will get to the point where it challenges this triangle. And that points to the 6th of July. Yes, pretty far down the line in summer. But let's put it that way for the time being, even though I expect it's more like a range-bound sideways scenario. Sometimes, how do I assess this is based on, not only what has been happening, but also the stage of Wyckoff. These tests, horizontal shakeout is very common. While we are waiting for this to come in, the volume themselves, like this one over here, hasn't sustained, and it turns red for 3 weeks, even though the volume, has been low. That's why my way of reading it is more like sideways than building momentum upwards. Okay, so Algorand weekly view, similar to Polkadot, a very deep test, pending for the sign of strength to come in. Okay, that was a quick one right after the automatic rally. So the next one, at least we hope to see a challenge that 0.24, this light blue key level over here. That's where the automatic rally was. But even better to challenge the purple 2.85 because that's where the subsequent sign of strength came in. That there. Very quick. 2 sharp weeks and then boom. Right after mid-July, like many other altcoins, that downtrend started and lasted for over half a year now. So back to this point over here. While the tests are still going on, the level it has gone to, it has basically set an all-time low for Algorand since 2019. However, the fortunate thing is that it didn't go too far and quickly, climb back just to get to this point where we are back to this red line again, 0.087. So you can say this level over here around 0.08 is the absolute low. 0.087 is more like the solid boundary where you can see the price when it drops below that red line, it gets support and bounce back up. It's a series of tests, so it will be interesting to observe. If next week, or this week only has about 7 hours left, it can still drop, but we don't know. Okay, when Asia wakes up, it can still happen within this week's candle. But next week, if it comes back down to like the 8 cents level, like what it did in the past 3 weeks, if once again the bulls are going to push the price back up, then they're building a more solid foundation, okay, before the price goes back to the sign of strength. Daily chart. Okay, this yellow dash line over here, around 8 cents, is the line that I just talked about. Okay, the bulls are definitely going to defend this line. One thing we can see from this chart is that the price has basically gone outside of the downtrend that started since July, okay, like I mentioned just now. So the tendency has changed, okay? It may not be absolute, okay? It is definitely not absolute, let's put it this way. But the sideways tendency is higher than, the price going south as of this moment, because the downtrend should be over. But we don't know. We are living in a crazy world now, okay? News coming out every day, not even every week, every day, is going to drive the market crazy. And I did say in various sessions, there are different types of investors or speculators, okay? Some would stick to a particular asset class. Some would just run around where money is going to flush in. So that's why it's not easy to assess what's going to happen for crypto, because the money has been flying around to prediction markets, to oil, to precious metal, like late last year, earlier this year. So there are a lot of things going on. They may be flocking to energy stocks or whatever that is, or mining stocks. So money chasing people, if they're not coming back to crypto, the bulls are not going to have a very great time, even though they may have these kind of mini rallies. If you're interested to access these sessions 2 days earlier than the others, join our members now. And remember, the Avoid Panic dashboards are now available on Substacks at L1s. That's the handle. App and web, up to you for your convenience. See you in the next session. Ciao.